समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या? समझ में नहीं आया।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to The Print. This is Bidisha and you're watching Economics. Today we are talking about Uttar Pradesh, India's most populous state, home to 1 in every 6 Indians. And we are asking a very simple question. Is UP's economic story as good as it sounds? Because if you've been following the headlines, you think that Uttar Pradesh is on fire and in a good way. Double-digit growth, trillions in investment, a $1 trillion economy on the horizon. The Prime Minister himself has showed up to 3 groundbreaking ceremonies. Global investors are signing deals in Lucknow with the energy of people who've just discovered a gold mine. But here's the thing about economic stories. They depend enormously on which numbers you choose to tell and which ones you quietly leave out. So today, let's look at both. First, the growth story. Let's start with the headline number that UP's government loves to cite. 10.8% compound annual growth rate since 2016-17. Now that sounds spectacular, and honestly, it looks spectacular on a press release. But here is the first thing any economist will ask you. Is that growth in real terms or in nominal terms? Real growth strips out inflation. Nominal growth includes it. And the 10.8% figure, that's nominal. It includes the inflationary effect, meaning that some of that growth is just prices going up, not the economy genuinely becoming productive. When you look at this chart on your screen, the real picture comes into focus. Between the financial year 2013 and 2024, UP's average real GSDP growth was 5.9%, marginally below the national average of around 6%. So in real terms, UP is growing slightly slower than India on average. Now look at the per capita income. UP's per capita income today is rupees 1,09,844. That's only 53.5% of the national average. In 2013, it was 50.5% of the national average. So in 12 years of growth, UP has closed that gap by just 3 percentage points. But here's the number that really stops you in your tracks. In absolute numbers, the per capita income between UP and the national average has widened from roughly 35,000 rupees per person in 2013 to 95,480 rupees today. Now UP is growing, but it is not really catching up, and that distinction is everything. Second, the Lewis transition. So why is UP not catching up? To answer that, I want to introduce you to a concept from one of the great economists of the 20th century, Arthur Lewis, who won the Nobel Prize in 1979. Now, Lewis said something that sounds simple but is actually profound. A developing economy has 2 sectors. One is traditional agriculture, low productivity, lots of surplus workers, subsistence wages, and the other is modern industry, higher productivity, formal employment, better wages, and genuine development, Lewis argued, happens when workers move from the first sector to the second at scale and at pace. Now, when that transition is complete, wages and productivity converge, and the economy becomes structurally modern. Think of it like water flowing from a tank that's too full, here agriculture, into one that needs filling, industry. When that flow is fast and sustained, you get transformation. When it slows or gets diverted, you get what in economics we call a stalled Lewis transition. UP right now is in the middle of a stalled Lewis transition. Look at this chart on your screen carefully. Agriculture employs 52% of UP's workforce but contributes only 25.8% of the state's GDP. That 26 percentage point gap is the structural alarming bell. Now you might say, well, the share of workers in agriculture has come down. In 2011-12, 70% of UP's workforce was in farming. Today it's 52%. So the 18 percentage points have exited agriculture. Isn't that progress? Yes. But the question is, where did they go? According to the periodic labor force survey data, they are predominantly moving into construction and informal trade. Not formal manufacturing, not modern services, just the next step above subsistence farming. Slightly better wages, but no pathway to the productivity growth that would actually close the gap with the rest of India. And meanwhile, agriculture's share of UP's output has declined by only 1.7 percentage points over 14 years. At that pace, agriculture will still account for around 20% of UP's economy in 2040. As I put it in the column, and I mean this quite seriously, expressways will connect cities where the majority of population cannot afford the tolls. Now let's talk about the investment narrative here, because this is where the selective storytelling becomes even more pronounced. Since 2017, Uttar Pradesh has held 2 major investor summits and secured MOUs worth 37.78 lakh crore. Now that's an extraordinary sounding number. The government has also held 4 groundbreaking ceremonies, political events where foundation stones are laid and project launches are announced for projects worth 12.10 lakh crore. But here's the thing. There are 3 very different factors in this paragraph and they are being treated as if they are the same thing. An MOU, a Memorandum of Understanding, is an intention. It's a handshake on paper. A groundbreaking ceremony is an event. It's a photo opportunity. FDI inflows, foreign direct investment, that has actually been recorded by DPIIT is capital. Real money deployed in the ground. Now look at the third chart on your screen and let the numbers sink in. 37.78 lakh crore in MOUs, 12.10 lakh crore in groundbreaking ceremonies. DPIIT recorded FDI between 2019 and 2025, 17,003 crore. And actual work commenced as revealed by ThePrint's investigation using direct government data in November 2025, projects worth approximately 3.09 lakh crore. That is the distance between a press release and a productive economy. I want to be careful here. This is not a conspiracy or a fraud. MOUs include domestic commitments, they include joint ventures and other categories way beyond just FDI. And some of this investment is genuinely in pipeline. But the gap between what is announced and what is deployed tells us something important about the nature of the investment climate. It tells us that investor summits are better at generating political optics than they are at generating factories. Now, I want to be absolutely clear about something because I'm not here to dismiss UP's progress entirely. That would be dishonest. The poverty reduction in UP is real and it is significant. Niti Aayog itself estimates that nearly 6 crore people have come out of multi-dimensional poverty in UP since 2013-14. That is the largest such decline among all Indian states, and that is a genuine achievement. The improvements in law and order have had real economic effects, even if they are hard to put a precise number on. Businesses and investors do respond to improved security and rule of law. And the infrastructure? 22 expressways, expanded airports, better connectivity to Purvanchal and Bundelkhand, these create foundations for future growth. Infrastructure is not enough on its own, but it is necessary. So the achievements are real. The question is whether they constitute transformation or just growth. And that distinction matters enormously because the policy responses are completely different. Now let's come to what needs to change. So what would genuine structural transformation look like and how do we get there? 3 things. First, industrial policy needs to move from summit-driven to sector-specific. UP has real productive capabilities in agri-processing, defense manufacturing and leather clusters. What it lacks is depth in the formal sector. A state level production linked incentive scheme targeting these sectors could do far more than the next investor summit. Second, investment tracking needs to change. Right now, the government counts MOUs and groundbreaking ceremonies. It should instead be tracking operational capacity, installed machinery, formal wages being paid, GST returns being filed. Those are the numbers that tell you whether investment is actually working or not. Third, the quality of employment transition matters as much as the quantity. Of the 18 percentage points that have already left farming, most went to construction and informal trade. If UP can direct the next wave into higher productivity formal employment, that will do more for convergence than any summit ever could. UP is home to 1/6 of India's population. What happens here does not stay here. If UP completes the Lewis transition, if it successfully moves millions of workers from low productivity agriculture into formal manufacturing and modern services, it fundamentally changes India's development trajectory. It makes Viksit Bharat by 2047 a real possibility. And if it doesn't, if the next decade looks like the last 14 years, with growth happening but structural transformation stalling, then India's aspiration of becoming a developed nation will be considerably harder to realize. With 52% of workers still in low productivity agriculture, UP does not yet look like a $1 trillion economy in the making. The question is not whether UP can build more expressways, host bigger summits, or announce larger numbers. The question is whether it can generate productive employment at the scale that India's most populous state owes to the country. Thank you for watching.